guys here 3 tips, principles, rules that I live by that has helped me become successful in the stock market, not just now, but repeatedly over a stretched period of time. So if this is you, you're someone looking for a way to get out of a rut, looking for a way to win in the stock market, check this video out. Hey guys, from the Rose Garden here in Portland, Oregon. I know I've given a lot of rules and principles already about the stock market throughout my videos over the past few years, but I just feel it's time to make and send new content and create new content for those who are asking more and more and more principles about it. So here are just some 3 tips that I hope will help you. These are things that have helped me over my 1 decade of investing in the stock market, and I hope that this is something that will that you get some principles from this that you can use on your own. You don't have to copy this, but you just have to find nuggets of information from this and try to see if it works for you. If it doesn't, it's okay, you can skip it. But what's important is this: you get as much information as you can. Try to see if it works your strategy and style. If it works your own strategy and style, do it. Because I just really want you guys to prosper. I just really want you guys to earn as much as you can and as often as you can. So if you're new to this channel, subscribe or like so you get updated in everything about the stock market, investing, business, and entrepreneurship. Everything that will help you be financially free. So anyways, rule number 1. I don't listen to my surroundings. I don't listen to the opinions of other people when it comes to my own personal investments. Of course, it's nice to listen to philosophies, principles, ideologies of how the stock market works. But when it comes to deciding on my opinion toward a certain stock, I try not to listen to what other people are telling me. I try to avoid the crowd because I've seen it already in my past investments. That every time I listen to people, it either ends up me making a mistake or either get hyped up. It happened especially when I was just starting out. I would find a stock that people are talking about, then I'd start to buy it only to find out that it has already gone up already, it's about to go down. And I've learned the hard way. Of course, you can also make money via this method. For me, the reason why I stay away from this because I've seen it the hard way, that it's not a money making scheme for me. It doesn't allow me to make money. It's not something that's sustainable. It doesn't allow me to create a strategy around it. And that my mentality is also this. I try to decide via technicals and fundamentals. That's why I've been hammering this over and over. Then after that, I log in, enter my password, buy the stock that I want to buy, then I'm done. And that's when I look at the news, and that's when I look for data. But I don't try to look for news and data before I try to decide. Because here's the thing, if you use technicals and fundamentals and then before you make the decision, you look at everything around you, it may cause to change your bias. It may cause you to shift and doubt your analysis. So my suggestion, try to ignore the crowd, try to earn, try to learn, try to have the conviction by your own analysis. Because at the end of the day, as your portfolio starts getting bigger, better, stronger, if you're trading larger, what will give you the conviction to put in and place larger amounts is you seeing that it actually works based on your own analysis. People don't have the conviction in the stock market. People are scared to invest in the stock market because every time they put in money, they're not using their own analysis. They're basing it more on what the crowd is saying instead of what's something inside telling them, their analysis from what they've seen from the numbers or from the charts. So that's tip number 1. Tip number 2, the stock market for me, it's not get rich quick. I'm not in the stock market to hurry. I don't see the stock market as a lottery. I don't see it as a jackpot. Every time you see something as a jackpot, of course you can earn money, but just like a jackpot, it only happens once. My goal is not to look for a jackpot. My goal is to find something that will give me repetitive cash flows for life. Something that will give me cash flow in perpetuity for the long term. And you can't do that if you're just looking for a jackpot. And the only way to do that, and I've been saying this over and over, the best way to get rich quick is to do it slow, is to love the process, and to do it. If you are after the stock market to get rich quick, you will get into a lot of mistakes. You will lose a lot of capital. And I've experienced this also in my first few months, first year of trading, that I tried desperately to find the cheapest stock out there that I think, hey, this might go up very, very quick because it's very, very low, and this will make me a multi-millionaire very, very quick. And that's not the best way to do it. You will see that one of the best ways for you to make money over the market is to position well and use time to make that investment, push hard and grow hard. And I've seen it over and over, not just in my own personal life, but with investors that have a great degree of not just sophistication, but they've seen it, they've earned well. It's not just about get rich quick, it's about doing it massively and repetitively so that the stock market becomes a great source of cash flow for you, and not just for you, but it will impact generations to come. So I encourage you, don't focus on doing it quickly, because you will make a lot of mistakes from there. Learn to love the process, learn to love learning how to do it, because later on the stock market is all about skill. The more skills you have, the greater your earning capacity will be over the long term. So that's tip number 2. Tip number 3. In my first few years, I kept putting as much as I can and as often as I can, and up until now, every time I have additional income, every time more money comes in, I try to put as much as I can in the stock market over and over and over and over. My mentality is always this: I'd rather have the potential to lose money in the stock market than buying stuff that later on I won't use or won't have any value later on. I encourage you, put as much as you can, and every time I make money, this is what I do. Every time I take profits, I don't take out the profits, I put it back to buy more. You roll over your capital. The biggest mistake of people is that every time they make money, they take out their earnings. Every time they earn money, they use it and spend it. My suggestion to all of you: every time you make money in the market, don't use it, don't spend it, don't take it out. Just roll it over, roll it over. Your goal is to have a greater base. Think about it this way: if you have ₱1,000,000 and that ₱1,000,000 earns 10%, you earn 100%. But here's the thing: if as you earn 100,000, put it back, and it suddenly becomes ₱5,000,000 after number of trades, after a number of years. Suddenly, if you earn 10%, instead of just earning 100,000 with 1 million, your 5 million now will earn you 500,000. How much more if it becomes 10 million, 15 million, 20 million? Earning 10% won't just be 100,000 anymore. Earning 10% from 20 million will give you 2 million pesos. And that's how amazing it is. People always think that earning money from the market, or making a large amount, or having the stock market as a huge way for you to grow your money over the long term, is something that is all about getting good trades all the time. Getting good trades is also amazing. It's something very, very useful, but it's also having the discipline, having the diligence that as you start earning, not to take out money, but roll it over and put it back so that you have a larger base. And you know what? Trading is a skill, but having the fortitude, having the discipline not to touch your earnings and keep it invested, keep it rolling over to make your base as big as possible, is a life skill that separates those that get rich massively versus those that just become average. And I encourage you, as you start earning, as you start getting more, don't spend it, don't take it out, but double down. As you get more earnings from your businesses, from your employment, put it back in the market, or put more into the market. Double down until it becomes so massive that earning 10% becomes a large amount for you. Earning from dividends becomes a large amount for you. And that's what I want to encourage you on. Put as much as you can, as often as you can, and don't touch your earnings. So I guess that's it. So those are 3 tips that I hope will help you as you venture in, and as you start double downing, and as you start using the stock market to make money for you over the long term. Because it really is possible that you can live the life that you want, that investing in the stock market can help you live life at your own terms, and it can help you win. That if you want to stay at your job and have another asset class, then use the stock market to help you give 2 sources of income for you. But if you want to use the stock market as your main source of income, it can be as well. So I hope this video helps you. From Rose Garden here in Portland, Oregon. I do hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.